Tonight we've got a fantastic masterclass with Andrew Law. Andrew is the chair and CEO of Caxton Associates, and he graduated from the University of Sheffield with a first-class degree in economics.
Thank you, Grace, and good evening, everybody. It's wonderful to be able to be with you all virtually, at least as it is in the New World Order. I arrived in Sheffield in 1984 from the other side of the Pennines, near Manchester, and my first year was spent in what was then Earnshaw Hall, which I believe has now been knocked down and replaced by the Endcliffe Street Village. Whatever you think of that today, I can assure you it's probably far more salubrious than Earnshaw Hall was in my day. The things I really remember about Sheffield are all good memories. Bus fares were 5p to go anywhere across the city. Beer cost 50p a pint in the student union. And Sheffield, of course, was a wonderful student town because it had what used to be the Polytechnic, now Sheffield Hallam, as well as the university you're at, gave a terrific student density and a great feel. I had originally wanted to be a chef, would you believe it, when I was growing up, but my parents weren't very interested in that and encouraged me to go to university, and Sheffield was my top pick. I was fortunate, I think, looking back, and luck plays a big part in everybody's life, in that finance was becoming the boom industry and was seen as being really attractive to work in, much like technology has been, I think, for the last few years. Margaret Thatcher, then the Prime Minister, was undertaking privatisations, British Telecom, British Gas, BP and so forth, and finance was really being brought into people's lives. They were encouraged to become shareholders and to aspire to own their own homes and so forth. So it was an exciting time. The City of London had been opened up to foreign firms, particularly the Americans, who arrived after Big Bang in 1985. And that was really transformative for the City of London. They wanted to broaden recruitment out. Prior to 1985, recruitment was pretty much Oxbridge only to work in the city as a stockbroker or investment banker. And as I say, I was lucky in that by 1987, when I graduated, the American firms had turned up and really broadened the net. One of the things that I did when I was at Sheffield was participate in some of those privatisations in the stock market, and I encouraged my flatmates and many of my friends to take £100 of their student grant, apply for shares in those privatisations and sell them on the first day of dealing. People would typically make £20–25, which in today's money is probably more like £100, and you could live for a few weeks off those profits, and that really whet my appetite and others to pursue a career in finance. I was very lucky that the professor who taught me economics, Professor Alec Crystal, had some experience at the Bank of England and actually went back to work at the Bank of England subsequently, where he rose to a high position. I was also fortunate in that we had a lecturer who taught a financial markets course on option pricing, which was pretty standard nowadays, but in the mid-1980s was very innovative. So I had my heart set on finance. My backup plan was to be a chartered accountant, but I really wanted to be in finance. I made 13 job applications in my third year to what used to be known as merchant banks, now investment banks. I was offered 6 first interviews. I went along to those. I was only offered 1 second interview, and I was offered 1 job. And as I say to people regularly when I talk to them nowadays, at what stage through that process, 13 applications, 6 first interviews, 1 second interview, 1 job, at what stage does failure become success? And obviously 1 job offer is success. You know, one of my takeaways for you this evening above all else is that if you want to work in a given industry, it really doesn't matter which company you join or what job you do. Above all else, you need to get into that industry. You'll meet people, you'll network, you'll learn a lot more about what roles are available once you're inside. So if you don't have a lot of choice over which company you go to work for, just target any company, all and every company is in that sector, and just try and get an in. When I looked back afterwards about why I failed at 5 of those 6 first interviews, some people said to me that it may just be that you didn't fit those companies. They were looking for something a little bit different, and people should always be careful about trying to make themselves appear as they're not. The fit between an employee and an employer is a mutual relationship, and people should be themselves. But there are some things that we all need to conform to. And the one difference between the second interview I was offered and the 5 I got turned down from was that I happened to polish my shoes before that interview. So perhaps I just looked a bit scruffy, coming from Sheffield to the City of London. I don't know, but it's worth thinking about, because we all need to conform in some way to the environments that we aspire to work in. There's plenty of degrees of freedom for people to express their personalities alongside conforming. And back in the 1980s, the people that wanted to express a personality would wear the loudest ties and so forth, or bright shirts, and that was all fine. But you had to wear a suit, you had to wear black shoes, and you had to polish them, and that's just the way it was. So trying to understand what the parameters are for the industry and the company you want to go into is really important. So have some degree of conforming, but retain your personality. That's essentially what companies look for in you. So my job in the city, in old money, 1987 money, my starting salary was £12,500. That was pretty much double what the chartered accountants were paying in London, £6,500. I think nowadays that's the equivalent of about £70,000 starting salary. £35,000 starting salary, but salaries have pretty much doubled in real money terms since then, and it's an attractive industry. So I started out in that first bank. I eventually worked for a bank that became JP Morgan through a series of mergers, and then joined Goldman Sachs, that many of you may have heard of. I did the same career, the same day job, right through my time in banking. I was basically employed to guess where the markets were going, to try and guess the direction of foreign exchange rates, to guess the direction of equity markets or commodities. And myself and my peers would get paid a percentage of the profits that we made for the bank. It was called proprietary trading. I ended up heading that desk in London for Goldman Sachs, and one of my best moments was actually coming back to Sheffield on the milk round, trying to recruit third-year students from Sheffield, and we did make some offers that year, which was terrific. So in my hedge fund career that started in 2003, I think there's a lot of myths or unknowns about what hedge funds do. So, and all hedge funds are a little bit different. Caxton, that I joined, and as I now am general partner for and run from London, basically tries to forecast what we call macro trends. We try and forecast economic cycles and how asset classes will behave through those. And if we think quite literally and simply, if we think something is going up in price, we will buy it. And if we think it's going down, we will sell it. And our investment horizon is several weeks to several months, and that can extend out to be a year. I'm sure some of you trade on spread betting, or maybe even have trades in financial markets from time to time, which is great. For those of you who do, you'll know that psychology is as important as economics, or any knowledge, understanding that markets are made up of human beings and some computers, but that people have emotions and that people don't want to miss out on trends, and that people have a deep fear of losing too much money when it goes wrong. So greed to participate in trends and fear of losing are two big psychological factors that affect day-to-day life. And when I look at some of the legends in the hedge fund industry, and most of those are American names rather than British names, all of those people have been able to combine a really great fundamental understanding of economies, a great understanding of how policymakers, central bankers, governments, how they think, how they make decisions, and what they think they're going to do, and to combine all of that with this psychology aspect of trying to guess what everybody else is doing who's trading in those financial markets too. And if you are skilled at all of those, then you will make a great trader, which is something to aspire to. Nowadays, nearly all of the money that we manage at Caxton is pension fund money. Pension funds, look for alternative sources of investment. They can only hold so many equities and so many bonds, and hedge funds offer them a diversified means of investing their prospective pensioners' monies. So it's very much a blue chip industry nowadays. It's evolved a lot over the last 20 years or so. Total size of the hedge fund industry is $3 trillion globally, which sounds like a lot, and it is. But the global assets under management across all equity markets and bonds is more of the order of 100 trillion. So it's 3% or so of the global universe. Most of the money in hedge funds used to be managed by human beings. Increasingly, computers and algorithms and coding have taken an increasing share. Essentially, human beings' decisions can be reduced to a series of rules. I'm sure many of you can code in Python or something else. When I walk around the trading floor at Caxton nowadays, nearly everybody does their own coding. You wouldn't have seen any of that 10 years ago, let alone 30 years ago when I started. But I think the very best people use a combination of inputs that they get from people that code or scrape the web, combined with their own human intuition. One example of our real-time programming recently was monitoring the breakout of COVID-19. So we had some web scraping set up, monitoring the number of cases that were getting reported around the world on a real-time basis. And that infamous weekend at the end of February, half term at the end of February, you might remember it, when people were in the ski resorts in northern Italy, and we started getting email alerts at 10 o'clock on the Saturday morning at the end of that half-term week with a spike in cases in Italy. And by Sunday morning, we knew the game was up, the virus had spread outside of China, it was in the ski resorts, and everybody would be travelling home from those ski resorts across Europe back to London. And it was a foregone conclusion at that stage that we were going to have lockdown. That was a month before the government actually chose to do it, for whatever reason. But that real-time web scraping was a terrific tool to have. For people interested in history, finance and trading markets is a great application of that. My first month in the city back in 1987 coincided with the stock market crash, when the equity market lost 25% of its value over a couple of days. A decade ago, we had the great financial crisis, which nearly took the banking system down in America and the UK. But many of the lessons that I learned watching my colleagues back in 1987 were very helpful and useful in 2008. February, March this year, we obviously had the COVID-19 impact on markets. The US equity market lost 35% of its value in 6 weeks. The central banks cut rates to zero, started quantitative easing and a whole lot of other things. The best lessons for the impact of COVID actually went back to, what happened with the Spanish flu at the end of the First World War and how that spread around the world so easily. And even, for some of you who know more about history, if you go back and look at the plague, all the way back in the 1300s, the way that it spread from Asia through the Silk Road is no different to what happened this time. The responses of the government and the central banks, of course, have been fascinating. I'm sure some of you have followed the stories. The massive government stimulus, the furloughing of workers, paying people's bills, mortgage holidays, business loans, and so forth, all designed to avert what would have been a repeat of history from the 1930s when we had the Great Depression across Western economies. One of the difficult aspects when you're trying to decide what industry to go into is that it's quite difficult to find out what companies actually do. And the good news is that most industries and companies actually do a lot of things. So if you were, for example, interested in technology, which I'm sure many of you are, you can go and work for a tech firm. The jobs which are on offer in tech firms, yes, they include coding and programming, but they also include sales, marketing, accounting, engineering, and so forth. And if you look at the sporting world, again, you have the same situation. I'm a Manchester City fan for my sins. And it astonished me to find out a few years ago that they had that Manchester City had 1,000 people in their London office. Why did the Manchester City have a London office, and why so many people? And they basically run their commercial operation from there, selling sponsorship deals and commercial rights around the world. And London is the place they chose to do that from. And the same in finance. I saw a question later on, do you need to have a maths skill to work in finance? You do in aspects of it. If you get jobs in investment banks after university, people will expect most of the graduates to be fairly highly quantitative, to be able to do spreadsheets, some coding, and so forth. But there's many other skill sets which people need beyond that. And when you think about how you're going to differentiate yourself versus all of your peers when you go to those interviews, that's one thing that you need to think about. So when I look at how do people get to the top, when I look at what does it take to be a leader in an industry, and how should you plot your career paths when you decide which road it is that you're going to go on, I think there's really 3 takeaways in this area that I would lay out. And number one is, what is your core skill set? Mine was forecasting markets based on a range of inputs and being able to make money by buying at one price and selling at another price. And I still do that same job function today alongside a whole host of other things, but that is my core skill. If you're a striker in a football team, your core skill is scoring goals. If you're a designer of apps trying to read consumer sentiment and designing games and so forth, your core skill set is forecasting what people might be interested in. But whatever it is in life, you need a core skill. You need to be one of the best at it. The good news is the harder you practice at it, the more hours you put in, the easier it is to have a comparative advantage in it, but you just need to make sure that you work at that core skill. But number two is what differentiates you versus many of your peer group who will also be chasing that job opportunity and may have a similar core skill set. And I think the answer to that is that you need to really think about and analyse who your audience is when you're looking at a job interview or thinking about getting into an industry. What is it that can make you a little bit different? What is it that they're looking for aside from your core skills? So mine, when I went into finance, or even today in finance, the industry is dominated by American banks. Some people would say they're fairly brash in their personalities and aggressive. Well, that doesn't mean that you need to be the same. As I said, most of our clients are pension funds, actually British pension funds, and the last thing a British pension fund wants is a brash American turning up, offering to manage their money and take very large fees in return. So you've got to have your own pitch. You've got to conform a little bit to what people want, but know what differentiates you and be proud of what differentiates you. It can be your background, it can be your the way that you talk, what you talk about, and so forth. And the third aspect of your life that's going to be important when you pursue a career or an interview is to develop what I call your cultural capital, to broaden yourself and make yourself interesting to other people. So yes, you're going to talk about your core skills when you get to an interview, but I can guarantee you at some stage your interviewer is going to ask you a question like, what did you do at the weekend? Or where did you go on holiday? Or what do you like to do with your friends? And it's worth thinking about that sort of question in advance, because your answer to that question will be highly unique on the day, and people will remember that about you. So what do people look for when they ask that question? I think what people look for is, number one, everybody wants to employ people that get on with other people. They want people that socialise. That shouldn't just be going to the bar, even though everybody knows that's what people do a lot of. If you're involved in team sports, that's great. Talk about that. Employers are very, very interested in people that have to train and are dedicated to one of their hobbies. It's obvious in sport, but it can be in anything else. If you're interested in history, how much do you read about it? Are you aware of current affairs and the analogies between what's going on today in certain countries and the history of those countries? These are all very topical questions, and you need to combine your desire to get a job with your interest in current affairs as relate to that job. You need to be current, basically. And if you do have an understanding, you can, in the old days, you could only get this by reading newspapers. Nowadays, you've got social media and everything else. But I would encourage you all to read the news and to draw analogies between what's going on and your job aspirations. It makes you more interesting, for one. So cultural capital, it can be, a musical instrument you used to play or a band that you sing in. It's just stuff that will make you interesting to a potential employer. So I'd just like to move on quickly to the impact of COVID-19. I'm sure it's having a horrific impact on your education and so forth. And we've all seen the A-level results fiasco in the past few days. Businesses had to adapt as well in real time to the problems. And what I would say is that the transition from having to go to the office every day to working from home, as painful as it's been for many people have lost their jobs and many businesses have gone under, is the bigger picture, the quality of life improvement that you're going to have over the next 10 or 20 years is actually going to be dramatic. I can't tell you how many people I know in London who spend 1.5 hours travelling to work in the morning and 1.5 hours travelling home in the evening on really crowded tubes and buses to get back to overpriced accommodation that's not particularly attractive. And if there's one thing that COVID-19 has taught everybody, is that people can be productive working from home in their own environment. They don't need to get on crowded public transport every day. They can be trusted in their own space to do their jobs. They can collaborate with their colleagues. There's a whole range of communication mediums out there, and basically employees are going to reclaim 2 or 3 hours of every day to do interesting stuff in, rather than commuting. Employers are going to save because they're not going to have to rent or buy such large office buildings. Everybody's going to save money. People are going to have more time themselves. And it may just be that we've fast forwarded to where we would have ended up in 10 or 20 years. Anyway, my other big takeaway about COVID-19 is that I, for sure, and probably some of your parents too, were the lucky generation. People that have grown up since the Second World War ended in 1945 haven't known any large-scale wars. We haven't known any plagues. We haven't known any great fires or any great natural disasters. It was really a peaceful, elongated peaceful time without any world wars. Until the time of the great financial crisis, it had been pretty much plain sailing. You know, the stock market crash of 1987 I mentioned earlier, that was nothing relative to the 1930s depression that followed the Wall Street crash of 1929. And my generation, your parents' generation, all they knew was rising standards of living, nicer houses, nicer cars, and then we had the technology boom. Everything just got nicer and better. Then we had the great financial crisis in 2008, the after effects of which are still being felt, I think, in society, partly as a consequence of austerity that the government pursued. And then we get COVID-19, which is very much an old world problem. These natural disasters, the viruses used to come around very frequently if you go back to the 1800s or earlier. Running businesses was a risky proposition. As many are finding out today, business can literally cease overnight. You know, if you own a travel company, your business was pretty much over in February. If you borrowed too much money to run your business, you were probably going to go bankrupt if the government hadn't helped, and it's still unclear when the situation will normalise. So it's a good reminder that, you know, when you think about who do you want to work for, do you eventually want to work for yourself, do you want to have your own business, that stuff happens out there. And there's a reason that people get paid more if they're successful running their own businesses than if they're employees. It's not always the case, but it's generally the case. And the reason is that people that run their own businesses take a lot of risk that none of us even know exists, like COVID-19. Staying on the racetracks, as I say, knowing what your downside is, particularly in your formative years when you get jobs, is really important. There'll be moments in life when you can take more risk, you know, when you've paid down your mortgage or something like that, or a great opportunity comes along and you can really indulge in something that's very exciting, albeit with downside risk, but you'll know that moment when it arrives. That moment's probably not your first move after graduation. But there's a lot of opportunity out there. I was at Sheffield, as I said, 84 to 87 in the year beneath me in the economics faculty as well was Andy Haldane, now the chief economist of the Bank of England, who's had a terrific career since graduating from Sheffield. But also, as you probably know, in his year was a lady called Denise Coates, who went off to work for the company Bet365 that her father had founded. And she has taken that to astronomical levels of global penetration and profitability, presumably using algorithms and statistical techniques and just applying them on a global scale. So when you look around or look on your screens now at all of your colleagues, people will go on and do great things. Anything is possible for anybody in this world. All you've got to do is follow your passion, follow your interest, and stuff will happen. And with that, shall we turn over to some questions?
Yes, thank you so much, Andrew. That was really interesting, and it was really nice to hear about your experience with Sheffield as well, and how you got to where you are now. So thank you very much for that talk. So we'll go on to some questions now. So the first question is Stephanie Taverner's question. If you're here, Stephanie, you had a question about environmental social governance. Are you happy to ask that, please? Stephanie here?
Hi, yes.
She was here for a bit. Oh, hi, yeah.
Yeah, it's more actually on your role potentially rather than sort of like key takeaways. So I was just sort of wondering how you think sort of like environmental social governance factors will become increasingly important sort of in investment strategies and decisions and pensions as well in the future, sort of thinking about sustainability.
Yeah, it's a really great question. If we just go back 5 years or so, there was this concept called socially responsible investing, which meant that some investors could invest in projects which would encourage better society or better outcomes for parts of society. They would absolutely not invest in what was seen as socially irresponsible projects. And that tended to be more exclusion-based investing, where you would rule out certain activities as much as it did encourage others. That industry never really grew that much. It always remained quite niche. ESG, environment, social, and governance, I think is of a whole different order. And it's going to become a really central part of all investing. And what are the reasons for that? Number one, I think that the global electorate, the voting population and the future voting population is really interested in the environment in which they live. The science of climate change used to be doubted by many. I think it's been proven beyond any doubt that the world is heating up and the damage is irrefutable. Whether you look at the fires in California, Australia, changes in the ice caps, and so forth. And as we've just discovered on COVID-19, these things can have, devastating consequences should they be allowed to happen. The funny thing about the E, the S, and the G in ESG is that they're all really related. If you have bad governance, which means bad management, bad oversight of management, bad corporate objectives, you don't tend to do the right social things for consumers or your employees. You also don't tend to do very good things for the environment. So they tend to go together, ES and G. I was at a breakfast with the governor of the Bank of England a few months ago, and one of the largest asset managers in the world, a lady who runs their European operations, said they viewed ESG as a massive commercial opportunity. People are only going to want to invest their savings and their pensions in companies and in industries that make the world a better place. And consumers are only going to want to buy products from companies that are sustainable and do the right things and employ people in the right ways and don't take advantage of them, and so forth. So what's fascinating about it is that capitalism and making money from investing is going to be very much hand in glove with better environment, better social parts of the world. And speaking to young people, that's the best possible thing you can hope for, because you're going to have to live with the consequences of global warming.
Thank you very much.
Thank you for that, Stephanie. Thanks, Stephanie. Okay, so question 2 is actually 2 questions combined. So I will get the two graduates that have asked each question to ask them now, and then Andrew's going to basically answer them as one question. So the first is from Emma Daffin Powell, and the second is from Victoria Tomova. So Emma, you asked a question about skills and attributes. Could you ask that first? And then I'll ask Victoria to ask hers.
Yeah, so I was wondering what skills or attributes you feel have most contributed to your success.
Thank you, Emma. And Victoria, you asked a question about challenges that Andrew may have faced.
Yeah, hi. So I wanted to ask, what are the biggest challenges you have encountered and how did you overcome them? Thank you.
Yeah, two great questions that really get to the core of any career or any sporting activity or any competitive activity whatsoever, or relationships even, and that is that people need to be resilient. However good you are at your core skill set, there's going to be others who are probably as good, if not better than you, as well. But being resilient to setbacks is the most important skill that you need to learn if you don't have it today. So, as I said, I applied for 13 jobs, got 6 interviews, got 1 second interview, 1 job offer. That's a fantastic outcome. But some people would be really distraught that they got rejected from 7 applications, or they got rejected from 5 first interviews. I can assure you that you're going to fail at many things in your lives, even if you're fantastic at your job. It's, working in the financial markets, I probably get half of the things wrong that I forecast. My skill set is not to let it bother me, to sell the things that aren't working, to keep the things which are working, and to make sure I lose less money on the losers than I make on the winners. But your ability to brush off bad news, dust yourself down, smile and look forwards is what will define you as great leaders and great winners in your sport, whatever your sport is, sport of life.
Okay, so let's have a look at the next question is from, thank you for that, Andrew, by the way. The next question is Ronak Sharma. If you're here, you asked a question about work-life balance.
Yeah. Yeah. Hi, Andrew. Thanks so much for that. I was just curious to know, because I'm from an engineering background, and I did an internship in an asset management company as a tech person. So I was quite curious to see the work-life balance that people had was quite different across the whole company. Like the fund managers, they were like on the spot every day and night working towards getting the best out of the fund, etc. So I was just wondering, how do you manage how do you attain a good work-life balance generally?
It's a great question, Ronak. The answer is that people do need to manage their work-life balance, because despite the fact that in today's world, most people need to be looking at their emails and following markets or whatever in whatever industry you end up in. And for me, it's 24/7. I stop reading my emails when I go to bed at 10:30 or 11 o'clock at night, but my phone will always ring. If the work number rings it's set up on the do not disturb function, so only certain people can call me at any time. And if something happens somewhere, my phone rings, which only happens probably 10 times a year. But it does mean that you're constantly on call in between Sunday evening, 6 o'clock in the afternoon when markets open in the Far East, in Australia, and Friday at 9:15 in the evening when America closes. So it is very easy for people that trade in financial markets to let the markets take over their lives, because the markets are pretty much open between 6 o'clock on Sunday afternoons and 9:15 on Friday nights, and it's all consuming. And it's not just the markets which are moving. We might have clients who are asking questions, or employees who are asking questions, who all think they deserve answers fairly quickly, which of course they do. So what do we do about that? Because I can assure you that although everybody has different ways of working, and I'm sure some of you cram and stay up all night before your big exams, and I'm sure others of you go to bed early before your big exams. Everyone has their own way of working, and you've learned over the years that you can succeed if you work one way, and you can't succeed if you work another way, or you've found some shortcuts that work, which is all great and all good. But when you become a slave to the markets or your job, you don't have as many degrees of freedom in that. You've got to be attentive and alert at all times of the day, not just when you choose to do your revision or write your essay that's due in. And how we deal with that is key to whether we're going to be on top form and focused at all times. And that means that people need to take holidays. Holidays are a time to relax. Most of the people in my company close down nearly all of their positions, their investment positions, before they go on holiday for a week or 2 weeks. And that's how they best deal with it, and they can have a real break. I've never been like that. I don't tend to change anything when I go on holiday. I just get up a bit earlier and read the newspapers and read my email, and I follow things, because I couldn't live with myself if I missed a major investment theme coming to fruition that I've been working on for 6 months, if it just so happened to work when I got on holiday. That comes with a price and a cost. The best way I find to strike a balance is exercise. Used to go swimming a lot, and I started playing tennis with a ex-pro. One of the joys of my job is that the markets tend to be fairly quiet at 10:30 in the morning. Most people are at work then, so the swimming pool tends to be empty, or you can get onto a tennis court for an hour. So I kind of dodge around other people's patterns, but it's really important to do things that take your mind off the job. And I like going out for dinner. It's great to go out with work colleagues socially outside of the office environment, and we can do that again now with outside restaurants being open for the rest of the summer, which is great, and it puts people in a more relaxed frame of mind and opens up different sides of people's personality and so forth. So I think people need to have hobbies. Exercise, I think, where people can do it is really important, and people need to take holidays and respect people taking holidays and not to harass them when they do take holidays. But the most successful people I know, particularly some American people who've been uber successful, do a lot of other things in their lives other than their jobs. They have a whole range of interests, whether it's their charities, playing golf, playing tennis, whatever. It's really important that everybody has other things to do. It'll make you more interesting as a person to your employer and to other people, and it will just give your brain a break.
Yeah, thanks so much.
Thank you, Andrew. Okay, so we'll do a few more questions. We've got 10 minutes left. So we've got the next question is from George Butler. If you're here, George, you asked a question about, oh no, we're going to skip that one because that was about math skills, which I think you actually answered, Andrew, in your talk.
Yeah, I can say a bit.
So we'll go.
I can say a little bit more about that.
Oh, hello. Yeah.
Yeah, because it's a question.
George, do you want to ask your question? Oh, sorry, Andrew.
Yeah, go on, George.
Hi.
I was just going to ask George if he wanted to ask it. Yeah, go on then, George.
Yeah, my question was just, is evidence of like strong math skills essential to work in finance? But yeah, you've touched on it a little bit.
Yeah, I touched on it, but it's, you could broaden the question to, does knowledge of economics, is that relevant as well to working in finance? And the answer to both of them is no, except if you want to participate in really narrow parts of finance. So if you wanted to be a quantitative, what we nowadays call a quantitative analyst or a quant, to use the jargon, you're probably going to need programming skills and some math skills. There's some aspects of work where you're going to need super high level of math skills. So if, for example, you wanted to work in risk management or portfolio construction or construction of structured products, then having a high level of math skill is going to be very useful to you. It's going to be difficult when you apply for jobs to necessarily be able to specify that, because banks tend to recruit more broadly. But you would find your way, once you got into a bank on a general recruitment program, into that sort of function. But if your math skills are basic, and that can be GCSE rather than A level, it doesn't mean that finance isn't for you. As I say, there's jobs in sales, marketing, compliance, and so on, where you really don't need much math skill. It depends how you approach it too. Everybody uses computers and phones as calculators nowadays, and some people would say, why do you even need to be numerate? Being numerate helps, but it's not the defining characteristic. But if your heart is set on having a high level of maths proficiency and coding proficiency, that's going to be your core skill set. That's great.
Okay, thanks. But I guess it still helps. Like, you did finance, so it's easier for you to demonstrate an interest in the economy and finance and stuff like that. But it's quite difficult otherwise.
I think that's absolutely right. And for me, yes, I did those courses that were highly relevant, and Sheffield was unusual as a university in those days because not many universities did those specific finance courses. But being able to tie it up to what's going on in the real world and being aware of financial market trends and stuff was probably as attractive to employers as the knowledge itself. But I would probably think about how you can apply those math skills if you have them. What would be interesting applications of them? An employer may well ask you a question.
It's actually because I don't have any. Not that I have them. Yeah.
Well, I wouldn't worry if you don't have them, because there's many roles in finance that you can do.
Great, thanks.
Brilliant. Thank you, George. Thanks for asking that question again, and thanks, Andrew. So the next question is from Sumya Arun, asked a question about artificial intelligence. Are you here, Sumya?
Yes, I'm here. First of all, thank you so much, Andrew, for your insights. They've been very interesting. I was just curious because I was watching a lecture earlier on artificial intelligence. How has artificial intelligence impacted the financial and banking sector? Thank you.
Yeah, so it's impacted it a lot, is the answer. So like many industries, artificial intelligence and quantitative techniques and algorithms have taken the place of human functions. So, we probably use the phrase machine learning more in finance and hedge funds than some other phrases, by which we mean that computers can have programs written for them that recognize patterns and then react to those patterns when they observe them and learn that this is how certain things react to certain events. And it's that artificial intelligence does a lot of the basic repetitive work in finance, like it does in many industries. And by repetitive tasks, I mean probably 50, 60, 70, 80% of what many people do every day is repetitive. And being able to get a computer to do that consistently and methodically is a great efficiency. But the good news is that the really big opportunities in finance come outside of that when you get new situations. So, for example, politics is very hard to forecast. The makeup of every politician, every government around the world is different to what has preceded it. The level of knowledge that people need to make a forecast of what a prospective leader is going to do is really quite hard. If we go back to the 2016 US presidential election, nobody thought that Donald Trump would become president. It was a real shock when it happened that night. But secondly, the markets had the very strong opinion that if he did become the president, that the impact on the stock market would be very negative. He would hurt growth through his trade war with China, and so on. And when the early results came through that made it look like Donald Trump was going to be president, the US stock market fell by 6, 7, 8% during Asian hours. And as you probably know, the stock market through to COVID-19 earlier this year had one of its strongest and best performances ever over that 3-year period since Donald Trump became president. The markets reversed actually within 12 hours of the election results, and the markets just came to recognize that their prior assumptions were wrong. And the quantitative machines, the artificial intelligence, the machine learning, all lost a lot of money following those election poll outcomes across the various states in the Electoral College that night. And a few individuals just took the view that Donald Trump was going to cut taxes and China wouldn't be that relevant. And they made a lot of money out of it. So the good news is that if you're working in quantitative things and you're a programmer, yes, there's some great tasks there and so forth. But equally, the good news for human beings is that that can only do so much, and it leaves a lot of opportunity as well.
Okay, thank you.
Thank you, Andrew. Thank you. Thanks, Sumia. Okay, so we're just going to have one more question because we're nearing the end now. So apologies that we haven't been able to get to the ones in the chat. And we haven't even got through our list of questions from you that you submitted because you've asked some really great ones. So we'll just ask this one as the last one. This is Sutabisu Masuku, if you're here. You asked a question about the potential implications of another financial crash.
Hi, Andrew. Thank you so much for your very informative talk. Can you hear me? Can you hear me?
Yeah.
Right. Thank you so much for your very informative talk. You mentioned earlier on that the 1987 financial crisis informed decisions around the 2008 financial crash. So my question is, what proportion of the decisions you make are informed by an impending financial crisis that might happen in the future?
Another great question. Although it's hard to forecast the timing of crises, history suggests that crises always happen, and they happen when nobody really expects them. I mean, even COVID-19, where there was data available in late December that there was trouble with this in Wuhan, Hubei province. By mid-January, China had locked down Hubei province. Still, the markets didn't react, and it wasn't until that Italian ski weekend when it became a real crisis in most people's eyes. So, what keeps me awake at night is worrying about where the next crisis is, because although crises take a time to develop, the markets literally flip a switch one day from ignoring events to panicking about them. And we just need to be very attuned and know that there will be future crises, and it will have a large impact on all our lives. And I think, post the great financial crisis and post-COVID, I think more people are aware of that now and will tend to be more skittish in their investment style. But it's relevant for everybody who's thinking of starting their own company at some stage, as they have to be aware that crises will happen, and they need to build resilience into their business models as well as their personal psyche. I noticed one question on the chat session I just answered before we finish, if that's okay, Grace. There's a question about cultural capital, and can it be a barrier for those from non-traditional backgrounds to enter sectors? And I think the answer to that is that the way that society has fortunately moved is that it's probably to the advantage of all in society now, and those who don't come from traditional backgrounds have probably got a really good platform to get into their chosen fields, because most companies I know are going out of their ways to employ people from a whole range of backgrounds. I came from a very untypical background to get a job in the City of London. I didn't go to Oxbridge. My father didn't work in the city. He was an engineer. My mum was a nurse, and I was underrepresented. That people are diverse for a whole range of reasons today, but companies have come to recognise that diversity is a plus. Diversity in their workforce is a plus, because they sell to a diverse workforce in who they sell their products to. And companies need to think like consumers, and they can only do that with a diverse base. So I wouldn't let any of your traditional family background or any other aspect of you deter you from pursuing a career, even if you think that the industry is not tolerant of you, or you think there's barriers to that, because I think those barriers are gone, and companies want to interview you and want to employ you.
Okay, that's great. Thank you so much, Andrew, and thanks for answering that extra question as well in the chat.